Welcome everybody to our Resilience webinar series. Today we're focusing on how to access capital for your business, which we know based on our survey results is a big issue for businesses, and we hope that today allows you to have a little bit more capacity in that space. This is part of a bigger picture webinar series that we do through the Arvada Resiliency Task Force, which if you're not familiar with ART, as we call it, that is a group of key partners and leaders in this community who are committed to ensuring the resilience of our businesses and the long-term success. And so we work together to identify education and growth topics to serve those businesses as well as possible. So we have a variety of different webinars, including a series around mental health. And we actually have a presentation next Tuesday through our centered partnership that we're going to drop some information on in the chat here in just a moment, and hope that you can join us for that. I do want to note that today's session is being recorded because we realize that sometimes an 8 a.m. summer webinar isn't the perfect time for everybody. And so we would love to be able to share this far and wide after. So note that this is being recorded. You should have gotten an alert, but you'll find this information later, and you're welcome to share it with people on your team and in your network as well, if it's helpful to them. So with that, we're going to jump right in today, and it's my pleasure to introduce our keynote speaker for today's webinar, Alan Ramirez, who has been with in his current role as Director of Lending for 15 years. He oversees loan programs and initiatives for Colorado Enterprise Fund. So with that, Alan, I'm going to kick it to you to take us away. Thank you so much.
Thanks so much, Cami. Good morning, everyone. Appreciate you being on the call with us today. As Cami mentioned, I'll be sharing a little bit more about our loan fund, Colorado Enterprise Fund, and give you some background on how we got started, how we work within the state of Colorado, and how we can help small businesses start their businesses as well as grow their companies. I'm going to share my screen here and pull up a quick slide for us. So we're an organization that's been established since 1976. Hopefully you can see this PowerPoint. And we're structured as a nonprofit. So we're 501c3, have been since 1976. Since that time, we've supported over 6,500 small businesses. We've deployed over 167 million businesses here in Colorado, created or impacted at least almost 30,000 jobs. And then as far as coaching hours, contributed at least 35,000 hours of coaching hours. The reason that we're structured as a nonprofit is in terms of small businesses accessing capital. Generally, there's a path for a small business owner to access capital. Normally, it might start with their own funds, money that they've saved that they're going to be contributing towards their business. Of course, friends and family that might be contributing to that project. Maybe it's just an equity raise that they've done. But once that's exhausted, once those efforts have been made, if there's still a gap in capital, that next step might be to go to a bank. Right? You walk into your bank, you've had your deposits there for years, and you're now ready to qualify for a business loan. If for some reason that business owner isn't able to qualify with the bank, then an organization like Colorado Enterprise Fund is a great next fit. And as a nonprofit, why we're a nonprofit is we're competitive with our rates. So, you know, for individuals looking for a loan, sometimes there's private investments, and those can be not so much predatory, but they can definitely be much higher. Our rates will be lower than credit cards as well. So the idea is to really try to give the customer a fair market rate without being too aggressive on that. And so being a nonprofit allows us to buy down some of those rates. And we also offer some business coaching, which I'll get into. As I mentioned, we started in 1976, but we're also certified by the U.S. Department of Treasury. And we're certified as what's called a CDFI, or a Community Development Financial Institute. So essentially, we're a lender with a community development lens. And so what that means is we're looking at, where is the business located? Is it rural? Is it in an urban area? Is it considered a low-income community? Is it woman-owned, veteran-owned, minority-owned? And so there's different aspects of our underwriting, which allows a little bit more flexibility. We're also ARIS rated, which is a national certification buy cars. We have the highest rating that you receive there. It's basically kind of like to see how our portfolio is performing, or our funds being really directly funded to small businesses. Lastly, we're also funded by the SBA. So due to the SBA microloan, we're able to provide, not only deploy loans out to the community, but also provide coaching to our small business owners. So what we do is we accelerate community prosperity. So essentially, we're trying to make communities thrive. And what makes a community thrive? When you think about community, you think about good schools, you think about potentially walkability, parks. There's various levels of community development. And so our piece within small business is we want to help stimulate more small business ownership. We want to try to promote more entrepreneurship. We want to help not only businesses start, but really help them thrive, help them be sustainable. A big part of what we do is we're creating and retaining local jobs. So if that small business owner starts their company, they're able to create income not only for themselves, but for their employees. The benefits of that service to the community, or that product to the community, plus it's creating jobs, are items that we look at. And we're revitalizing neighborhoods. So Arvada is a good example of all their Main Street businesses there. Trying to help more businesses open up there. If it's a low income area, how can we change that community? How can we help businesses become a destination for that area, slowly improving those communities and helping them revitalize? So that's a big part of what we're offering there. And so why would you go to Colorado Enterprise Fund? There's a lot of reasons why a bank may not be able to help a small business owner. The traditional items you'll see here, it's if someone has a lower credit score, if they have less collateral, then they're asking for a $100,000 loan, but maybe collateral is only $25,000. That might be a challenge for the bank. If it's an existing business and cash flows are tight, right? A business normally doesn't need a loan if cash flows are strong. But once there's a dip in cash flows, they might go to the bank. The bank might say the cash flow is not there, therefore they're not able to help. And maybe just some flexibility that we offer is just some longer terms. But I would say also where banks can't help sometimes is if it's a small loan amount, that might be something that the bank just doesn't have enough profit on. And so that, if it's a smaller microloans are generally loans that are 50,000 and under. That might be difficult for the bank to provide. They might want to throw the small business into a credit card, which isn't always ideal. They might recommend a HELOC, which depending on what the market's offering in rates could be a good option. But if you're trying to keep your personal out of the business, maybe a HELOC isn't the best product for the customer. So there's a lot of different reasons why the business won't qualify. But for us, we've just got more flexibility in terms of how we underwrite our loans. Lower credit scores, our smallest loans are $1,000. So there's a lot of flexibility. Our largest loan is $1 million. But for the larger loan, really from a FICO perspective, all you need is a 650. If a customer is looking for a smaller loan, as an example, maybe it's a $20,000 loan, startup, let's say their credit is high 500s. The FICO score matters, but really it's what's behind the FICO score. If that individual tells us, hey, I was in a car accident a couple years ago, I had some medical collections, I've been disputing them, it's an issue. However, if we can show that, look, this collection has been on there 2 years ago, since that time they revolved their other trade lines reasonably, it's not so much about the FICO score, it's about the timing of it. If the FICO score is high 500s, but they're currently behind on car payments, or they're currently behind on other loan payments, that's a bigger concern, because the immediate snapshot is the issue. But if it's a matter of the individual not revolving credit, if it's a medical related item, we can work with that type of customer. So that's just an example on our flexibility. Collateral, we really try to be flexible on as well, generally 50,000 and under. We're not aggressive on collateral, meaning if you're a service-based business, you don't have a lot of fixed assets towards your business. We have some flexibility there up to 50,000. And cash flow is really, any lender wants to put the business in a position to succeed. I think as a business owner, everyone that generally applies for a loan has good intentions. They want to repay the loan. So tighter cash flows is something that we're going to focus on significantly. If someone is going through a slower season, we're trying to understand what their high seasons look like, what's contributing to that slower cash flow at the time. We may ask for projections to kind of see how they work themselves out of this and why the loan really does help them improve their cash flow. Does it improve production? Is it going towards marketing? Are they hiring people that are now going to be out in the sales field, helping them increase revenues? So it's a lot of conversations. It's not just looking at the document saying cash flow is not there. We may just say, well, tell us how you kind of work out of this. And then just the longer terms, generally terms are set up based on the use of funds. So if you're purchasing equipment, maybe the life of that equipment is only 5 years. But if we recognize that cash flow is tight, and if we recognize that, look, if we can give them that use of that equipment loan for 7 years versus 5 years, that could alleviate the burden of the loan and allow them a little bit more working capital to kind of work through at least the first year or so, right? So now the cash flow is a little bit stronger. We're more flexible on the terms, and so hopefully it's a win for the customer as well. So I mentioned our loans up to $1 million, flexibility in terms of our loan terms and some of the programs, and then really we feel kind of our unique proposition. What separates us from just being a standard lender is our business coaching, which is one-on-one coaching, which I'll go into more details on. And this is just in 2019, we were Community Lender of the Year here in Colorado with the SBA. And so nice to have received that honor. Who we help, here's a quick snapshot. I mentioned 52% of our clients are low income, 42% are women-owned businesses, 35% are minority-owned, 62% are startups, and 12% of our businesses are veteran-owned. And so it's who we target. The startups piece is critical to entrepreneurship. So we define a startup as a business that has no track record of revenue. So it's pre-revenue. And so we are looking at projections. We are looking at their ability to execute. We are looking at the business plan and who their management team is. And again, it's a lot of conversation to better understand their deal, better understand the vision for the business. But that's a quick snapshot of who we help. And so in terms of the loan products, I mentioned our SBA microloans up to 50,000, which is where we have a lot of our flexibility. The SBA Community Advantage, it's just a program for slightly larger loans. Banks have a program that's similar. They call it the SBA 7A program. The benefits of using an SBA program, whether you walk into a bank or whether you're working with us on this Community Advantage, is that the SBA guarantees a portion of the loan up to 85% of the loan, depending on the amount. And what that means is if the loan was to default, 85% of that loan would be paid by the SBA to the lender. And so it basically allows the lender to take a little bit more risk, a little more flexibility. One of the advantages of that program as well is that it's not collateral driven. So again, a service-based company that doesn't have many assets to contribute. Let's say that personally, the individual doesn't have any assets to pledge either. That type of program with the guarantee is really beneficial because collateral is not a requirement of the loan. They won't decline it based on collateral. And so for larger loans up to 250,000, that's a great program for businesses to leverage. We manage various loan pools throughout the state, whether it's city and counties. We have one with Arvada Economic Development Agency right now, and I'll share some more specifics on that on the next slide. But yeah, we partner with various municipalities throughout the state. So these are targeted place-based efforts to help grow those specific communities with access to capital for those areas. And then different initiatives that we have are around our Valor loan is specifically for veterans. And so we have discounted rates for our veterans. We have discounted fees as well. Transforming Safety is a program specific to Southeast Colorado Springs. It also is dealing with recidivism as individuals are coming out of prison. We're looking at entrepreneurship to help those individuals start their companies and begin to build wealth for themselves. Healthy food access. So these are programs for communities that don't have access to healthy foods. And so there's many communities throughout our state where they might be rural and the nearest grocery store might be 30 miles away. And so how do we help these communities better access grocery retailers? Even in our metropolitan area, there's a lot of areas that are considered food deserts. And so if low income communities are eating fast food or just going to convenience stores, the idea is that how do we help these areas get better access to retail, connecting, distributors to those areas or even farmers. And so a big initiative to help those types of businesses. We have a Black Business Loan Fund where it's loans up to $50,000, discounted rates at a 2.99%. And then our creative economy. So any sort of kind of craft business, a maker, it can be a restaurant, it can be bakers, they can be breweries, distilleries, where they're kind of making products, traditional art-based businesses as well. But creative economy is a big movement within the community development space. And so we've got a new loan fund around that as well. And then ITIN loans is individual tax IDs, numbered loans. These are individuals that are here that are paying taxes. You can purchase a home with an ITIN, not through us, but generally there are lenders that would accept an ITIN number to purchase homes. The government, as long as the individual is paying taxes, you would use that ITIN to either purchase a home or even run your business. And so we have smaller loans for that program up to $25,000, and also it's a lower rate, 2.99%. But that's just a quick snapshot on some of the programs that we offer. I kind of spoke about these products already. SBA microloans up to 6 years, the Community Advantage program. I said 250, but recently the SBA did expand that to 350,000. So I apologize for that, but it is loans up to 350,000. And here's a quick snapshot of some of the partners that we work with, covering 13 different cities and counties throughout the state. Overall, we've lent over $4 million through these partnerships to over 1,300 small businesses. And the terms vary by loan pool. In Arvada, during COVID, and Daniel Riley's on the call from the Arvada Economic Development Group, but we quickly came together to figure out how can we help get money out there through to help businesses that are dealing with COVID at this time. Businesses were shutting down, they needed cash injections, and so through that program, we were doing loans up to $25,000 at a 3.99%. It was kind of lower documentation, intended to be faster outputs for the customer. They needed money yesterday. And we've had a long-standing partnership with the city of Arvada beyond just the COVID program, but that was a pivot that we did during COVID. But these are a few more examples of the partnerships. And the idea with community loan pools is really, for some of these areas, how do we help small businesses access capital? And so an example is if we know that there's a business in Arvada looking to start or looking to expand or just needs a loan for whatever that situation might be, we're more incentivized to help that business owner. We've got the partnership. We're going to do our best to help them with help them understand the underwriting, help them understand some of the pain points or some of the opportunities where they can improve. But we want to get the money out to them. And then the coaching services are always there to help them throughout the life of the loan. Here's a quick example on a business that we've helped. This was a manufacturing-based business that we helped back in 2011. it was a smaller loan. It was referred by the Chamber of Commerce, but essentially they're a manufacturer that builds out some kind of off-road camper trailer. So we know that's a big movement that we've seen more and more of, but they came to us just for working capital. We were able to help them with the loan. It's a quote here that he's put that it was a critical time for their business with the loan. And it's not always a lot, right? In this case, it was 25,000, but 25,000 is 25,000. It helped them with some hiring and just general working capital needs. But that's an example of who we've helped in the Arvada area. Electric Cherry is a local retail business as well, woman owned, and this falls into that creative economy. This was a $50,000, $51,000 loan, also working capital. And I believe they were a startup. And so this is an example of a local business owner also in that area and who we've helped. The business coaching is a key piece of what we offer. And so we really focus on 4 pillars. And the way it works is generally, the way it works historically is if a business qualifies for a loan with Colorado Enterprise Fund, they would be eligible for free coaching throughout the life of the loan. And the 4 pillars that we're focusing on really is I'll start with financial literacy. It's a big one. You know, if someone is running if they're an electrician, maybe that individual is good at being an electrician. However, managing the financials, it's always a different story. And so how do we help them maybe with QuickBooks? You know, how do we help them maybe clean up their profit and loss statements, help them begin to understand their margin, their cost of doing business? You know, we start looking at metrics for the industry based on their revenue. And where should their cost of doing business be? What's their cost of labor? What's their cost of goods? You know, what are they doing with their accounts receivable, accounts payable? If they're collecting on receivables, how can we help them collect on that faster? So financial literacy, it's broad. We've got QuickBooks specialists to help them. We've got CPAs also to help them. You know, maybe you've got a single member LLC that's bringing on more employees. They're starting to make pretty good gains in terms of their revenue. You know, is it time for them to consider being an S Corp? You know, things like that. We have general business consultants that can just look at maybe it's their marketing. What's their online visibility look like? Do they have a website? Do they just use social media? For customers right now, we can help create, if they don't have a website and they wanted a website, we've got a program right now where we'll connect them with a third party to help design their website. CEF would pay the hosting fee for that first year. And then the idea is that the individual learns how to make updates to their website if need be. So if it's a new product, if they just need to change some of the content, we're now teaching the individual on how to make those changes to their website, but helping them raise their visibility. We look at kind of their operations, what they do in terms of are they paying living wages to their employees? Are there employee handbooks? What kind of training do they have in place? And then lastly, it's legal assistance. The legal assistance might be if the customer wanted us to review a lease, you know, is that lease in the customer's best interest? Maybe they're starting to do work with the airport, you know, or if they're in construction, maybe they're dealing with larger prime type companies and are more contract based, and are those contracts in their best interest? So the legal support is generally not so much litigation, it's kind of just more contracts and that type of guidance, but it's all one-on-one. It's always free. There's a bullet point here that talks about online business tools. We have for customers that maybe they don't want to meet one-on-one, maybe they'd rather kind of do some things on their own. We have an online tool called Initiate Prosperity. We can give customers a 30-day free trial, even for non-customers, to just try that out. But it's a massive directory of information for small business owners. There's a lot of kind of videos, quick 5-minute, 10-minute tutorials on marketing, on cash flow, on just P&Ls and balance sheets, what to look for. But that's available to the customer as well throughout the life of the loan if they didn't want to meet one-on-one. And so that's kind of an overview on what we do. I've listed my contact information here. Ryan Guyton is the loan officer for Jefferson County, and so I'm listing his contact information here. So if folks wanted to take note of both of our information, either one of us can answer questions for you. But the idea is just to be a resource for you guys. I feel generally for small business owners, every situation, every scenario is kind of different. So I know it can be helpful to just call and talk to someone and start talking about what your scenario is. Maybe you're not necessarily wanting a loan now, but maybe you're kind of planning for the future and say, hey, I might need a loan in 6 months to a year. What do I need to do? What do I need to prepare? And that's a great time to call and speak to either us or any lender, really, to begin to help you be better prepared for that once you walk in. And something that I think for lenders, one thing for you guys as business owners to consider when a small business is looking for capital, I think us as consumers, as the individual, it's easy to forget that lending institution generally has goals, right? They want to fund, they need to fund and get their money out there. And so for a small business owner, things to consider is the C's of capital. And I failed to mention this earlier, but quickly, I'm going to go through what's called the C's of capital, which everyone should know. Every lending institution is going to consider these C's of capital. But the first one is just know what your credit is, know what your FICO is. If there's an issue there or a blemish, it's okay. Just be able to maybe speak to it, and you'll know if that lender is able to take flexibility on it. CDFIs like us, generally credit is not, we don't want to decline a deal just based on credit. But the first one is know your credit. What's your FICO? Where are you at? If you've got a lower score, I would say is probably less than 620, less than a 620 FICO score, you probably want to start talking about what might be contributing to it. And so that's the first one. Second one is cash flow. If you're a startup, your cash flow is going to be based on projections. So you'll want to be able to speak to, hopefully you've got projections, and you'll want to speak to those projections, how much you might earn per month, how much you might earn at the end of 12 months, what your revenues are after expenses, what kind of profit might you be seeing. And so that's the second one is cash flow. Third is collateral, what kind of assets the company might have and what you're willing to pledge. If there's already a lien on the business, maybe that means the lender's in a second position on those assets. And so maybe personal assets might be considered. And so if you own a home, that's generally a big one. Or if you have vehicles that you can pledge, that, titled vehicles, that's something that you can consider as well. But what kind of collateral, if you're asking for $100,000 loan, what's the value of your business assets? What's the value of your personal assets? Kind of know where you fit in that range. And then character is the biggest one. And for us as a CDFI, if what your experience is a big part of your character. Do you have a business plan or projections, assuming you are applying for a loan? If you've worked with a resource in the community, maybe you've gone to a group like the Small Business Development Center. There's groups like SCORE. Where have you gone for help with that business plan? That's a sign of character. Are you responsive? Are you answering the questions in a concise manner? What kind of management team you have. So there's various characteristics that play into that, but character is a big one. And a lot of what we do is character. And I think if you know where you stand within those C's of credit, ideally you have at least 2 or 3 of those C's to qualify. And the banks want not perfection, but they want a pretty solid deal. And I think for us, it's kind of like that 4-legged table. It's strong with the 4 legs, but maybe with only 3 legs, it still might hold up, but it's wobbly, right? Look at it that way. But I would say every deal is different. I would say call either me or Ryan. We're happy to answer questions for you and talk through those items with you, give you feedback on where there might be some opportunities to improve, or if it seems like you might be able to qualify now, we would send you a link to apply. A lot of what we do is via online, but if that's a challenge, we can definitely go to small business owners, place of business, and work with them in person as well. But I'd say generally a phone call, 10 minutes, we'll know how we can try to help your deal. So with that, I think I would, I don't know if there's any questions. It looks like there's a few things in the chat, but I'll open it up for questions if there's any.
Awesome. Thank you so much, Alan. And I'll ask if everybody has questions, if you want to pop them in the chat. You can also use the raise hand function on the bottom of your screen. If you just click that, we'll see that you want to be unmuted, and we can do that as well. So while people are navigating that, maybe we'll pass it to Daniel from our Arvada Economic Development Association for a moment to talk a little bit about the local partnership, and then we will see if there's any questions that have bubbled in the chat or with raised hands.
Yeah, sure thing. Thank you, Cami. And thank you everyone for joining the webinar this morning. And Alan and your team, we appreciate you so much. AIDA has had the pleasure of working with Alan for many, many years now. And he mentioned a couple of success stories in his presentation, but there's many more that we could talk about as far as Arvada businesses that have benefited from this great program. And for us, it serves such a great niche where we have businesses that are wanting to grow, but just aren't quite positioned yet for favorable lending from the commercial banks. And through what Alan mentioned there of that, not only capital access and programs to fund your business, but also the educational and wraparound support for your business to make sure you're successful in paying back that loan, but also positioning yourselves for better, more favorable rates in the future. We've seen a lot of great success through that. And surprisingly, very few businesses have, through our long history, have not been successful when tapping into this program. So I encourage everybody to at least reach out to Colorado Enterprise Fund and figure out if that is a solution for you. But we're just really, again, grateful for this partnership, very long-standing, and they have been great to work with, as well as responding to the needs in our community. Alan mentioned how we pivoted for COVID as well, but we really like the alignment that there is with all the other work that we're doing through the Resiliency Task Force. And so if you have additional questions about AIDA and some of the supportive resources or complementary resources that we can provide, Isa on our team is also on the call. And there's many ways to engage either through our team or directly with Alan. And as far as the AIDA microloan program goes, that program is available to all Arvada brick and mortar businesses. So basically the only Arvada businesses that are just right off the bat ineligible would just be our home-based businesses at this point in time. But if you're looking to grow from home-based into a brick and mortar establishment, that's definitely on the table for consideration. And Alan's team can help you understand if you're qualified for that loan program. So we encourage you again to reach out, and correct me if I'm wrong, Alan, but hopefully AIDA's partnership makes that underwriting even a little bit easier for your team in cases where there's just a little bit less certainty for those borrowers. Yeah,
it's for that type of program, we're just incentivized to try to do the loan. So like when it's on the margin, we're going to do the loan, and it also, it's so if it's a little bit of a tougher scenario, but it still has the viability, we'll move forward on it. We're just more incentivized to do it. And like Ryan said, we've most of these loans have performed really well. So we've been fortunate from that perspective. And so we'd love to do more loans and happy to answer any questions around it if there's any.
Awesome. And thanks, Cami and your team for having us.
Awesome. Wonderful. Well, thank you to both of you. I'll ask one more time. I don't see any questions that have popped up, which means you did an amazing job, Alan, and you covered all the questions everyone has, or they're still trying to figure out how to drink their coffee and wake up this morning. But we would love to circulate resources after alongside this webinar. So for those on the call, those watching later, definitely keep an eye out for that. Obviously, we know this is an ongoing business issue, and we're committed to being a good partner in that, certainly through the Resiliency Task Force. And as you heard, AIDA and Colorado Enterprise Fund have some amazing resources to offer. So big thank you to everybody for hopping on bright and early with us this morning. And we look forward to our next session next Tuesday, talking about mental health. Thanks, everyone.
Thanks so much.
Thank you.